Hi guys, it's Stock Curry, and man, we had a red day today. But don't worry, I wore the blue shirt, not the red shirt, so Friday is gonna be better. I'm gonna let you know what you should be doing right now as far as buying, selling, holding, what you should do. So let's get into it. Now it's crazy, almost everything was down today. We're talking large cap, mid cap, small cap, even crypto was down today. Everything's going down. So what is going on? Is the market crashing right now? Well, maybe. Keep in mind that we have not seen a correction in the S&P or Dow since last year. We might be seeing a correction now, but not a crash. The Dow is only down 2% from highs. The S&P is only down 1% from highs. This is just a little tiny pullback so far. Now, whether we get a correction now or not, I don't really know, but I do think that we will get a correction sometime in September or October if we don't get one right now. The reason is we have a lot of catalysts coming up that could trigger a correction. Those are things like rising bond yields, rising interest rates, rising inflation, or even the entire country shutting down again due to the pandemic, all of which are bad for stocks. So what should you be doing right now? Well, I'll tell you what I'm doing. I am buying the dips. I went on a shopping spree Thursday morning. Almost everything I bought Thursday morning was up by the end of the day. So you do whatever you feel like is best, but for me personally, I am buying the dips. Okay, the last thing I want to talk about before we get into our stock picks is the fact that I'm going on vacation this weekend. So there will be no video on Monday or Tuesday. Today is the last video until Wednesday. So the next video will be uploaded on Wednesday. Don't expect a video from me on Monday and Tuesday. I'm not even going to have internet access, most likely. I will not be uploading videos. So I hope you guys have a lot of success. I'm sure you'll do great without me. Either way, I will be back Wednesday and we can all come back together on Wednesday. All right, let's get into today's stock picks. Now, for those of you who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks from the top 10 YouTubers. Each day, I give you the cliff notes on every single stock pick from the top 10 YouTubers, as well as my analysis on their stock picks, all put together in one concise video. If anything I talk about today piques your interest, make sure you listen to who I say talks about that stock and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and then click the bell icon and click all so that you can get notified when I release my next video. If you're watching this on Facebook, go ahead and follow the page also. In fact, I'll give you 5 seconds to do all of that right now. Alright, before we get into today's stock picks, I just want to remind everyone that I am not a financial advisor and none of the YouTubers I analyze are financial advisors either. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions which may or may not be accurate. Please do your own research before investing in any asset. Now, if you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it's also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $2,300, you can sign up for Webull using my link in the description below. When you sign up using my link in the description or first comment below and deposit just $5, Webull is going to send you 2 free stocks worth up to $2,300. All right, let's get into today's stock picks. And first up is AAPL. This is Apple. Keenan Grace likes AAPL for the fundamentals. AAPL should be releasing new products soon, including the iPhone 13, the Apple Watch Series 7, new AirPods, and a new MacBook Pro. Keenan Grace also showed us how large institutions have bought over $1 billion worth of AAPL over the past few days. Keenan Grace gave us a $145 buy-under price and a $135 ideal buy-in price. Now, technically, I've been saying for the past few days that AAPL is overbought and is in need of a great pullback. We started to see a little bit of that today, but AAPL still has a lot of room to drop on a pullback. Therefore, I'm going to give you a $140 buy-under price and give you the same $135 ideal buy-in price that Keenan Grace gave. Next up is AMC, and this is AMC Movie Theaters. Larry Jones bought more AMC on the dip Thursday morning. And boy oh boy did AMC dip. AMC was down over 12% this morning, but closed up over 6%. And Keenan Gray showed us how AMC had a massive 28% intraday price movement. Now, regarding the securities threshold list that AMC is on, I want to clarify something. The failure to delivers must be purchased after 13 consecutive settlement days of failing. There are two things you need to understand. First, these are settlement days, not calendar days. So weekends and holidays do not count. And the second thing to understand is that the 13 days is on each individual failure to deliver. It's not all at once. So the buying pressure to fulfill the failure to delivers will come slowly over time. Now, I find it very, very interesting that Thursday was the first day of the 13 days, meaning that 13 days ago, the failure to deliver started to skyrocket high enough to get AMC on the security thresholds list. Now that 13 days have passed, what did we see today? We saw massive buying pressure and we saw the share price of AMC rise while the market overall went down. That is not a coincidence. This is the beginning of market makers buying undelivered shares of AMC in order to fulfill the failure to deliver from 13 days ago. And guess what? AMC is still on the security threshold list today, which means we could see the same buying pressure we saw Thursday happen again almost every single day for the next 2 weeks. That in turn could trigger a gamma squeeze, which in turn could trigger a short squeeze. Now, I'm not telling you to run out and mortgage your house to buy AMC. Only invest money into AMC that you are willing to lose. All I'm telling you is that the short squeeze that everybody has been talking about finally has a real catalyst to make it happen. That trigger is the failure to delivers being fulfilled through the buying of shares, resulting in the share price going up. The share price going up resulting in a gamma squeeze, and a gamma squeeze resulting in a short squeeze. And next up is JETS. This is an airlines ETF. The traveling trader likes JETS because the airline industry has not fully recovered from the March lows of last year. Airline stocks also dropped recently on news that countries were shutting down due to the spread of the Delta variant. JETS is now oversold on the RSI and the candle is below the 300-day EMA. This is a great dip buying opportunity on JETS. Next up is NEGG. This is NEGG. They're an online retailer of consumer electronics and computer parts. Chris Zane recommended buying a July 16th $40 put option. On the screen, he showed the price at $6.85 or $685 for the 100 share option. Okay, let's talk about this play. First of all, this is a weekly option, so this is a day trade. When we day trade, we are only concerned with the technicals. We are not looking at anything else. The fundamentals don't matter on day trades, so let's just look at the technicals. We can see that NEGG was significantly overbought on Wednesday and it pulled back 36% on Thursday. Now, a put option will make money if the stock goes down. So will NEGG go down? Yes, I do believe it will. Based upon the technicals, NEGG should drop down to $30 over the next few days. So buying a weekly put option on NEGG is actually not a bad idea. Chris Zane should make money on this play. The only issue I have is the fact that he is looking at the option price as of close and NEGG dropped another 4% after hours. And it will most likely drop a bit in the pre-market trading on Friday as well. So you're not going to be able to buy the $40 put option for $6.85. You're probably going to pay a whole lot closer to $9 for this put option. So here's where the problem lies. If you paid $9 for a $40 put option, then your break-even price is $31. And I only expect NEGG to drop down to $30. So you're literally risking $900 to make $100. That makes no sense. I would never do this play. The stock is going to go down, but unless you bought the option on Thursday, you probably won't make money. The option will be too costly on Friday. So let me give you a better play that will greatly increase your chances of making money. Rather than buy a put option where you are risking $900 to make $100, you can sell a call option vertical spread. Here's how that works. Select vertical from the options menu in Webull. Then click on the $45, $50 call option. And I'm going to pull up the graph so you can see how you make money on this. Now make sure it's on sell. If it's on buy, you're going to be going the wrong way, so make sure this is on sell. Now as you can see on the chart, so long as NEGG closes at or below $46.70 on next Friday, you will make $170 on this play. And if it closes above $46.70 on Friday, then the most you will lose is $330. So now you're only risking $330 to make $170. And that is much better than risking $900 to make $100. Also, your break-even price is $46.70, and that is much, much better than a break-even price of $31 with Chris Sain's option play. So to recap, by just buying a single leg $40 put option, you are risking $900 to make $100, and your break-even price is $31. By selling the $45/$50 vertical call spread, you are risking $330 to make $170, and your break-even price is $46.70. So what's more likely? The stock closing below $46.70 on Friday, or the stock closing below $31 on Friday? And what would you be happier making? $170 or $100? And what would you be sadder losing? $330 or $900? So for all of those reasons, I think Chris Sain is right that NEGG will go down in price, but there is a much better way to make money on NEGG dropping than buying a single leg put option, and that is by selling a vertical call spread option. Next up is PLTR. This is Palantir, and they're a data analytics company. Tom Nash uploaded a video Thursday morning where he explained why PLTR is not a consultancy business. PLTR is working on building software that is scalable, and he showed that in the numbers how PLTR's revenues are growing exponentially, not literally like you would expect with a consultancy business. I'm not going to cover all of the details of Tom Nash's video in this video, so if you want to know more, then I encourage you to go watch Tom Nash's video that he uploaded Thursday morning. I will also let you know that I like the fact that PLTR was green on an otherwise down day in the market. That is bullish to me and tells me that PLTR is near a bottom. I actually purchased some call options on PLTR this morning. If you want to know everything I buy and sell within minutes of making the trade, you can follow me on Facebook and Twitter at Real Scott Curry. That's Real Scott Curry. And finally, we have WBA. This is Walgreens. The traveling trader still likes WBA. WBA had a major overcorrection to its earnings beat and is now severely oversold with the RSI way below 30 and the candle significantly below the 300-day EMA. In fact, WBA is almost down to the 300-month EMA. Now remains a great time to buy WBA for either a short-term or long-term hold. WBA is now down over 11% from where it was trading at right before earnings last week. And the average analyst price target on WBA is $55.63, which represents a nearly 20% upside from Thursday's closing price. By the way, if you want to gain access to tip ranks or any of the other free resources that I use to analyze stocks, I have links to all of those in the description of this video. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what your favorite stock pick is. And if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up using my link in the description or first comment below and deposit just $5, Webull's going to send you 2 free stocks worth up to $2,300. The minimum you'll get is $11. Think about that. Deposit $5 and get between $11 and $2,300. That's crazy. And if you're not a US resident, or if you want to trade OTC penny stocks, then I recommend Interactive Brokers. Interactive Brokers is a highly discounted trading platform that has commission-free trading in the United States and commissions starting at just $1 in Canada, 4 euros, or 6 Australian dollars, depending upon where you live. Now, both Webull and Interactive Brokers also give you the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. And I do have material connections with both Webull and Interactive Brokers, so when you sign up using my link in the description or first comment below, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. Now finally, don't forget to hit that like button, subscribe, and click the bell icon and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you Wednesday.